All right, good morning, guys. It is Tuesday, January 24th. Not a lot going on in the market today. Kind of a quiet morning. It is 8:20 a.m. No fancy views to show you. I'm in a Home Depot parking lot. We had something break at one of the offices, so I had to go grab some caulk. So, got that. About to head back. Struggle of small business never ends. So let's get right into it. So gold, my favorite subject. Gold is actually slightly down. It's at 1921. It closed. It's below where it closed yesterday. However, it did still hit 1943. The overall market is slightly down. Oil is slightly down. So it seems to be one of those days where the economy regresses a little bit. But overall, that's still pretty high. I'm still sticking by guns. I'm gonna say something's gonna come in February. Mortgage rates. So mortgage rates is an interesting one. We talked about this a few weeks back, and it seems to be continuing. So mortgage rates are at an 18-week low. Just because of bond market restructuring, the current average mortgage rate is actually 6.15%. That's significantly down from almost 7. It didn't actually hit 7, but it was just under. It was like 6.8, 6.75 just a couple months ago. And we've talked about this before, where homeowner sentiment is up, building sentiment is up, prices seem to be coming down. So I think we might see a spring where there's a lot of home buying, and it might move back into a seller's market, whereas right now it's more of a buyer's market. Having said that, here in Utah, it's still pretty high. Fees are still very high. Mortgages are still very high. When you look at any kind of property, it is still very expensive. So even though that's a national average, regional averages are going to be different. Utah's a growing state. It's a vibrant state. We have a lot going on. We have the Silicon Slopes. We have the resorts. We have all this outdoor activity. We have a growing internal population. A lot of migration from places like California and other blue states, but even other red states. A lot of people will move from Idaho, from Texas, here into Utah. So our property values, I don't think, are going to drop very high. But Nevada prices are going down. I looked at the Nevada market a couple weeks ago. Nevada market is starting to come down. The prices aren't as high as they were about a year ago. I haven't checked other states. Nevada is just close to us because of Vegas. When I had family going into Vegas a couple weeks ago, I thought, how much would a place be down there? And the prices are pretty good. For about $200,000-300,000, you can get a nice home, about 1,500 square feet, right outside of the Strip. So if you wanted to go there and use it as a vacation property and then Airbnb it, you could. I don't think Vegas is the best place to Airbnb. I think the Strip is too much competition. There's just too many hotels, too many amenities. A lot of people go for the hotel itself because of the amenities that come with it, the pool, the spas, the shows, everything being right there. But I'm sure you can get something for it, especially around big holidays. With this Formula One event that's coming to Vegas, I'm sure it's going to be selling out everywhere there. So that's probably going to be a good time to have an Airbnb. Next up, in continuing with the mortgage rates. So this is interesting. The Federal Housing and Finance Agency is planning to change some of the fee structures in May. So that will actually also lower mortgage rates because it will reduce a lot of the federal guidance and a lot of the federal fees and regulations that come with a mortgage. So that should reduce cost. So I think this is going to be a very good year again for housing as stuff starts to rebound. The market kind of adapts to these higher rates. Next week, Monday and Tuesday, we're supposed to get a result of what Jerome Powell thinks comes as far as interest rates. I anticipate 2 basis points, so 0.5 percentage raise. A lot of the market is saying 0.25%. Maybe I'm wrong. But I think that inflation is still very high. Even by all accounts, no matter where you think it is, it's not at 2%, which is where the Fed wants to be. And they want to hit it hard at the onset and then taper off later. I don't think they've hit it that hard yet. So I think they're going to raise it 0.5 percentage. We'll see. Europe is stabilizing. So Europe is also adapting to a lifestyle where Russia is on its borders and it's in war. But it's actually looking very favorable for investment. So the euro is strengthening, prices are down, so inflation is slowing. Housing prices have gone down. If anything, there's a strong deflationary movement in a lot of housing. So housing is almost too cheap right now. It's becoming a problem in a lot of the Norwegian countries. but it makes it very promising towards investment. So there's a potential for a lot of investment coming to Europe. We'll see what that entails in the next couple weeks and months, but potentially Europe could be coming back very strong. So I think that's also good for the global economy. And we've talked about a couple big news stories around here where Germany wants to distance itself from China, probably reinvesting in its own economy. Large lithium deposits have been found in Sweden. Their bank interest rates are going up. Well, remember, they used to have negative interest rates. So I think Europe is going to have kind of a little rebirth here in the next year or so. Lastly, I'll just talk about, this is an interesting story. So Brazil and Argentina are coupling up for their own currency. They're trying to essentially create a Eurozone. I guess you would call it a South American zone. They're going to couple up together for a shared currency to begin with, but then later want to invite other Latin American countries. We'll see if that pans out. I think there's a lot of issues in those countries, a lot of issues of corruption, a lot of issues of organization. I don't think just because Europe did it that it's possible to do somewhere else. And you could argue it hasn't worked out well for Europe. A lot of countries in there aren't pulling equal weight. Brexit, of course, being a famous example where it exited. But even remember when the United Kingdom was part of the EU, it did not have a shared currency. It did not use the euro. It maintained the pound. So I don't know how advantageous this whole system would be. I don't know if it's going to happen. I honestly think it's probably going to fall apart. I think they'll try it for a couple years at best, see that it's not gaining a whole lot of success, and it'll probably be dissolved. Maybe they're going to do something fancy, go crypto-based. More than likely, that's probably what they're thinking, is to have a crypto-based currency, because that way they can have outside investment. Crypto's popular, you can start any coin and somebody's going to buy it, so they figure we'll couple up, have a crypto that's backed by the economies of both countries, and then expand from there. It's not a bad idea in theory. This is one of those scenarios where a crypto, I think, could work, but I just don't have much confidence in either country's organizational skills. It's hard enough to do this, period, but especially in countries like this where there's a lot of corruption, a lot of instability. There were riots, and they had their own January 6th just a couple weeks ago. I don't see this being a very strong possibility. That's pretty much it. There's not much to talk about today. That's kind of all the big stories from the market. I'll probably see you guys tomorrow. I'm just going to get to it, and I hope you guys set amazing goals. I hope you meet your goals, and I'll see you guys tomorrow morning.